Hi everyone, hope you're all doing well, and today I'm doing my UK stock market portfolio review, and this is where I show my UK stock market portfolio and how it's all doing, and I'll try to spend a couple of minutes talking about these companies and where I'm at with them in general. Now for you guys that might be your first time watching this series, basically my UK portfolio is a newer portfolio. It only got started in about April time, and the reason why I started is because I used to, for the 5 years I've been in the stock market, I used to just focus on US stocks, but then there wasn't really many UK YouTubers on the scene really, and quite a few people were attracted to me because I think I've got a UK accent, I guess, really. And yeah, a few of those guys said, can you do a UK portfolio and see how you do on the UK side? And I thought, you know what, let's give it a go this year and we'll see how we do in a year's time. And obviously we're getting around to a year's time now and it's going pretty well, to be fair. It's going probably a lot better than what I thought it was. Because obviously you're learning so many new companies. It's like being a new investor really, because a lot of these UK companies I had never looked into before when I started. So yeah, it was kind of like starting investing all over again. But yeah, I'm pretty happy where everything's gone, and yeah, it's just a monthly series where you guys can see how my portfolio is doing. I know if you guys like invest because you saw like a Greg's video I did or a Hollywood Bowl video I did, and you guys are invested in that, and then you follow me because I talk about them because you guys own them as well. And yeah, it just kind of keeps up that like transparency, so you guys can see how I do. There's a lot of people on the YouTube scene that don't really show a lot of how they're doing in the stock market, and you guys here can always every month see my portfolio and what's up, what's down, and new stocks that I'm buying, for example. And I just think it's really good. So I've kind of got a kind of reference point of like, why should I listen to you? And then I can, I can say, well, here's my UK portfolio. You can see how it does every month, and you can track alongside it. So yeah, I think it's just a little bit of a bit of proof really that I kind of slightly know what I'm talking about. Sometimes not amazingly, but yeah, sometimes you can see like, yeah, I've got a few decent gains, and hopefully that kind of gives the confidence to kind of, hey, this guy kind of knows what he's doing. So yeah, anyway, that's enough for that. We're going to go through the UK portfolio. I'll try to spend a minute on every company where possible. Obviously from the last portfolio, you'll see that I've took my profit in Whitbread and WH Smiths. This portfolio, all the numbers were taken from Sunday night, so there's not many changes. There was a stock that I bought on Monday, which if you want to know what stocks I'm buying, I can't say just yet, but if you do want to know, you can join the Patreon. There's a link in the description. I always post when I'm buying and selling on there. And yeah, there's not really a huge amount of change from Sunday, but yeah, we'll go through the portfolio and see how everything's doing. So we'll start at the top. I always like starting at the top. We've got 888 Casinos, up 112%. So it's a 100% club member. The first one in this portfolio to get there at the time. And yeah, great company. I think these guys, I did have a little bit of a check the other day and I was like, right, is it this company now a time for one to sell? And then I looked at the expansion plans that these guys have through like the US and Europe, and I was like, nah, these guys are staying in. So yeah, AA Casinos up 112%, really happy with that one, the first one to make 100% return. Next up, Airtel Africa. So obviously last month we know this one had a bit of a dip, slowly starting to recover, but overall, like, it's not a company that's in there for the share price gain. That's not the main point. I like it as a little bit of a dividend play as well. So yeah, Airtel Africa, I'm just happy to hold on the side, get a little bit of share price gain, a little bit of dividend in there. It's one on this list that I'm not kind of focused on getting a massive share price gain on. Next up was Barratt Developments. So this one's had a little bit of a dip. A lot of the house builders have had a bit of a dip. As of recording this video, I know that on Monday they did recover a slight little bit. But yeah, I mean, down to 23% gain. Same again, really, though. It's not really one that I'm in my head going, I want 100% gain from this one. It's kind of like I'm just going to watch the share price just tick along nicely. And then when it ticks along nicely and the dividend comes back, which should be in the next 12 months, then I'll also get a very good dividend yield from that because of my entry point. So yeah, I'm playing Barratt Developments very much like Airtel Africa. I think it'll have very good share price gain and then just pick up a nice bit of dividend up in 12 months time. Next up is Boohoo. So currently up about 39%. I'm just going to say 40%. We're up 40% on Boohoo, which is pretty good. This one for me is one stock that I would really like to see kick on through 2021 now. This is one that, when I buy companies, I'm normally like, I don't really expect them to do anything in like this first 6 to 12 months. If they do, then obviously that's incredible, and I'm really happy that they've really kicked on in that time, because it's, really quick, fast gains. But, you know, when I'm buying as a long-term investor, I'm kind of looking at a lot of these companies. I'm not really expecting, you know, crazy things in the first 6-12 months. Now, Boohoo for me has kind of got to the point now where it is coming up to the 12-month period where I've been holding this company. The year mark, and for me now, when we got to this mark, I don't want to see Boohoo have any more dips. I don't want to see any bad news coming out now. It's just a quiet dividends. I want 2021 to be a good year for Boohoo. I want to see Boohoo get to the £5 mark. If it gets to the £5 mark, then that will give me a nice 100% return. So yeah, I really want to see Boohoo kick on, and I want to see it start kicking on to that 100% return club right now. So yeah, Boohoo is kind of at the point now where it needs to start moving up. Now, obviously, I've taken some nice profit from Boohoo. You know, I think I've trimmed 3 times on my Boohoo position because of how jumpy it is, going up, going down, going up. You know, I think I've took 3 nice little profits from it, but I don't want to just keep taking, you know, 30-40% share price gain from it. It's nice getting that little bit of profit, but it's even better when you're getting 100% gains, 150% gains, 200% gains. You know, that's where you start to rack up a lot of money and wealth, and snowball that money in the portfolio a lot more when you're getting bigger gains. So I you know, as a long-term investor, I don't want to keep having some little gains. I want to start getting, you know, some, you know, 3-figure returns on it. So yeah. Next up is Card Factory. So this is currently in my whole investing portfolios the most risky stock I have right now. 100%. It is definitely a risky stock. This is very close to bankruptcy, and that is a big problem. At the same time, I'm still very confident in the company. Now you can see here that it doesn't make up a huge amount of my portfolio, and if Card Factory was to go to zero, I would be totally fine by it. Well, I won't be fine. I'd be like, I don't want to lose money, but I'd be like, yeah, you know, fair enough. I took a big risk and the risk didn't pay off. But if Card Factory does pay off, then that's going to be really nice on the share price gain. You know, the company is so cheap. This stock will at least go to £1, which from where the prices are right now is about a 300% return. So it's one of those, it's a 50-50 shot. If it doesn't make it through, there we go. If it does make it through, it's gonna, you know, so the company was doing major profit before all of this, and it's just in a bad situation where it didn't have a strong balance sheet going into the situation. If it had a strong balance sheet, the company would have made it through the other side. So yeah, I mean, I think they should be able to raise cash. If they do raise cash, then this company is going to 3x. If it doesn't raise cash, it goes to 0. And that's it. And people asking me, am I buying more Card Factory? And no, I'm not buying any more, because the risk I've got there now is where I'm happy. I don't want any more money going into that. It's just sit and wait now. And hopefully it all plays out very good. We'll see what happens. Next up is Jet2. So this was a 100% club member. It has pulled back slightly. It's down to about 78% return. It got hurt on last Monday and Friday, because of airlines and borders and everything like that. But it's just general short-term stuff. Like this Jet2 will soon return to a 100% return club, and yeah. It's a fantastic company. It will do really well, and like I said, this is a company that probably will be one of the companies that gets, you know, more of a 200-300% return in this portfolio. So yeah, I'm happy to have another 100% return member in this portfolio. Next up, Greggs. So this one has slowly gone kind of unnoticed, and it's putting a nice return of the month of January. We've got up to a 43% return, which is absolutely amazing. I think that this will join the 100% return club. I have no idea why it's done so well over the last kind of month, but hey, I'm not complaining. Very good return. Kind of looking at the point now, if it does get a little bit higher, I might just take 10% profit from it. Something I'm considering. But yeah, apart from that, I'm happy with everything's going. I have no plans to sell the position as a whole. And yeah, I'm really happy with how that one's performing at the moment. Next up, Hollywood Bowl. So this had a little bit of a dip, really. Not a huge amount, but still up 30%. I mean, this one is just going to stagnate until we get the bowling alleys back open, whenever that may be. And probably when we see the bowling alleys get back open, then we'll see the share price go up. And that's what it's kind of waiting for. Next up, JD Sports. So JD Sports, as we're recording this, the stock has had a very good day. So this one's up back into the 40% range. But as I've taken these numbers, obviously it was about 38%. And these guys have had a little bit of a dip recently, and I'm not 100% sure why. I think it's probably because of raising capital. Maybe that spooked a few investors, but it's a great company. If you look at the JD Sports balance sheet and its revenue growth, and its US growth, it's a great company, and it's one of those companies I look on right now and I'm like, I should have bought a bit more of this one. But yeah, so what can you do about it? You always say that when you know the outcome, don't you? Next up, Legal & General up 22%. Once again, playing this a bit like a bit of a dividend play as well. Very much like Airtel Africa, Barratt Developments and everything like that. MJ Gleeson, just wanted a bit more exposure into the kind of house builder market. It seemed like a very cheap play. MJ Gleeson is one that I'm not holding as long term as like a Taylor Wimpey or about the Barratt Developments. It's probably going to be like a 50% gain. And yeah, we'll see how it gets on. National Express. Now this was another 100% club member. These guys here have had a little bit of a drop. Obviously, it's all because of the lockdown and everything like that. But National Express is in my opinion, is a great company. It will join the 100% club very soon. And yeah, I've got no plans to sell that one once again. Rightmove has dropped a little bit. It's only up 3% right now. Once again, this is a company that I think I'm on the edge of maybe buying a bit more of. I'm not 100% sure if I will do just yet, but it's one I am considering, so we'll see where it goes from there. But that's one I am thinking of adding on to at the moment. Then we've got S4 Capital. So this is kind of really, there's two kind of newish positions in here. S4 Capital is one of them. Currently down about 3% on that one now, but I'm very happy for S4 Capital to do what I said earlier in the video, and that's just kind of chill for like 6-12 months. If S4 Capital on the share price can just chill for 6 to 12 months, it will leave me to build a very good big position in this company. And this is one of my favourite growth companies currently on the UK stock market. I think it's a future FTSE 100 member. And yeah, as long as S4 Capital stays about here, you'll just see that little section of S4 Capital just get a little bit bigger. And we are talking on the lines of coming up to a position size that could be something like a Jet2 position. So yeah, as long as it stays somewhere around here, pretty happy with all that. Next up, Taylor Wimpey. So this one's up 16%, can't read. This is pretty much exactly the same as what I said for Barratt Developments. Happy to get a bit of share price gain, also holding for a little bit of a dividend play. So yeah, we'll see exactly how that one plays out. And the last one here, which is my newest holding, which is Wizz Air. So Wizz Air was on another drop, very much like Jet2, because of all these border tightening and stuff like this. And yeah, I think that if it stays about here, I'm quite happy to maybe buy a little bit more of. I kind of bought this hoping that it would flatline, and then I can buy more of and make it a big position, like on the light, maybe a bit smaller than Jet2. But it is shooting up a little bit, so if it does carry on shooting up a little bit, then I probably will just take a nice 50% profit on it. But if it can drop down a little bit and there's some more bad news with airlines, which is very, very likely could happen, then that will just give me the ability to just maybe buy a bit more of. So yeah, we'll see how that one plays out. So if it does carry on going up, nice 50% profit. If it goes down, I can buy a few more shares, which is what I'm hoping really happens. So yeah, overall, that's my UK stock market portfolio for the month of February. Hope you enjoyed it. If you could, smash the like button. If you do want to start buying some shares, there's a link to a free trade account, a Trading2 account in the description. You open an account through them links, you also get a free share, which is pretty good. And yeah, hopefully enjoyed looking at my portfolio once again. Hope yours are all going well as well. And yeah, I'll see you on the next video.